What's happening, YouTube? I'm in the building, apparently solo, bringing you guys the Monday morning game plan for your stock market life gains and things you can do to help you make more informed decisions about the best stocks to pick to help you grow your portfolios. If you're finding me for the first time, please subscribe. If you're watching me on Facebook and you want to comment in the comment section of this video, please go and join us on the YouTube live stream and subscribe to the channel. So, big news from this past week, ladies and gentlemen. Biden signed a $1.9 trillion rescue bill, and now stimulus checks are going out. One of my co-hosts got a stimulus check Friday night, 11 p.m. And so the hot thing that I've been reading in all the magazines and all the digital press, Barron's Magazine, Market Beat, Market Watch, what are your best stimulus stocks that you can buy because people are going to be spending money on those stimulus checks? And so I've compiled a list. I went through each one of these publications and some of the same names kept popping up. And when I saw that, that kind of sent my spidey senses up, tingling. I mean, real deep tingling, deep in my loins. So these are the 7 stocks you guys can take a look at. And we'll go through them one by one, and I'll tell you how I feel about them. And I've also got your short interest. If you don't know by now what short interest means, you should have learned during the whole Wall Street's bets GameStop. Short interest is when people start shorting a stock because they believe the stock is overvalued and is going to go down because the company fundamentals are bad. And what can you do with that information? If you want to, you can put a put on the stock as well, that you believe the stock is going to go down and you can make some money as the stock is going down. So I've got the top 10 short interest list. And we've got a couple of other things going on, and we're supposed to have a special guest jumping up here as well. So guys, sit back, take notes, and let's get ready to make them life gains together. First and foremost on the list, let's start with these 7 stimulus check stocks you need to have in your portfolio. Number 1, what we got on the list? Dollar General. And ladies and gentlemen, anytime you see an organization having a huge expansion, putting up stores left and right, that is a good sign of the company's growth. Everywhere you go, you see Dollar Trees popping up on every corner, almost everywhere. Hold on just a second. We've got a guest in here. Can you hear me? You got to turn your mic on, because if you can hear me, I can't hear you. All right, people, as he's getting his stuff together, let me finish. So number 1 on this list is Dollar General. If you don't have any Dollar General, go ahead and get yourself a piece of that, because they are set and poised to take off as people start spending those stimulus checks. And the individuals who predominantly will be receiving stimulus checks, my people, are going to fit in this group. So check them out. Next on the list, Target. Now, you guys have been following me for a long time. You know, Target is a foundation in my stocks. I've got a couple of call buys on Target because of their earnings. Hold on. Now we got Larry in the building. Let people say hello. What's up, brother?
How you doing, man? Sorry about that. The time change threw me off, man. I was thinking like it's not even dark yet. Then I saw the live thing come up on my phone, so I was rushed in here.
It's all good, man. We rolling on through. We're going through the top 7 stimulus check stocks you should be thinking about investing in. And there's some good ones and some that me and you already own, Larry. So that'll tell you something good. But just to recap for you, the first one we discussed is Dollar General. And I kind of broke down the reasons why. Then we're on Target now. I don't know if you have Target, Larry, but you know, it's one of my foundations. I have Target. And I've got some call buys.
I don't actually have any of the big box stores in my portfolio.
Oh my God, Larry, what are you doing? If you're going to get one, you need to get Target for sure. Because what I learned by holding Target last year, Larry, of all the big box stores, guess which one went on an up trajectory the most and maintained it? This box store right here. Yes, sir. Yes, sir. So, ladies and gentlemen, definitely for your stimulus check needs, check out some Target. And we've got our special guest. Let me see if he can get in again. Can you hear us, Jarrell? If you can hear us, we can't hear you.
Yo, can you hear me?
We can hear you now, but we can't see you. Do you want to not be seen?
Oh, you know what? Listen, I just picked up the new cam. I never connected it. It's not even take it out the box yet. But I mean, we can bypass that for now, right now.
Okay, so ladies and gentlemen, this is our special guest, Jarrell Cox. He's down with one of the investing groups I do. Say hello to the people, Jarrell.
Hey, what's going on, everyone? Name's Jay Cox. Been investing in the game for a minute, and listen, looking forward to seeing what we're going to talk about tonight.
Hey, no problem. So that's the homie Larry up top, the living legend, my co-host. Jarrell down at the bottom.
How you doing, man?
What's going on, brother? How's everything?
Good.
So as of right now, Jarrell, I'm just going through what Barron's magazines and a couple of other magazines have kept listing as the top 7 stimulus check stocks. We're just going through them real quick as who's giving you guys some time to get in here. The next one that everyone is saying you should take a look at is Kroger, grocery store chain. Second biggest grocer behind Walmart. I don't own any of them. I've never messed around with them. But because of the volume of where these stimulus checks are going, this is something you guys can take a look at. Maybe you might want to do some call buying. This is definitely one to look at. And next on my list.
You know what? Before you go on, I just have to give you a little props on this one because back about a year ago, I think it was when Albertsons went public and you were like,
Right.
I don't know about Albertsons. And you were like, I'm not really hot on grocery stores anyways. You were like, but if you're going to get one, maybe you should get Kroger versus any of the others. And I bought Albertsons on their IPO day and was stuck with it for a few months, waiting for it to go back up so I can break even. And all the while, it seemed like Kroger was slowly growing. So,
hey man, Larry, I don't do this for PE. I earn a living off this, buddy, my man. I study these companies, their revenues and all. So I knew if you was going to get one, I would rather you had gotten Walmart or Kroger.
Right.
But I don't have any investments in grocery stores unless I see a buying opportunity for maybe a call, a put, or a short-term gain. But they are definitely on the list. I would tell you guys, definitely take a look at them. Next on the list is Overstock.com. They make the list because, ladies and gentlemen, e-commerce is booming. And Overstock tends to get a lot of people's, I don't want to just say discretionary income, but they also get income because we have a lot of people who are now selling items online. So they go there and find these good deals and then they resell them. And that stock has been trending in a great direction, as well as all the other stocks have been doing that in the e-commerce space. And next on the list, Activision Blizzard. I bought Activision Blizzard back in January because the volume and the revenues that they had done coming off everybody being home from gaming was just through the roof. And that trend is still going up, ladies and gentlemen. If you haven't got some Activision in your portfolio, this is a gaming opportunity you guys can put in there. But this is not the only gaming opportunity. If you like gambling, here's another one. You've got DraftKings. And one reason why this stock is going through the roof, my people, is simply because more and more states have been progressively opening up for you to do gambling online. And DraftKings has built some great partnerships with ESPN, Fox, and other major sporting outlets so that you can literally just get on your computer, click 2 buttons, and be gambling. Simple as that. And last but definitely not least, now this is one that's going to make me and Larry cringe a little bit, but you can't go wrong with these people if you hold them for the long run. Apple. Good old Apple, ladies and gentlemen. Largest company in the world. They pay a decent dividend yield, and Apple ebbs and flows. Apple is a stock that you put in your portfolio that you really and truly are waiting for the slow burn of growth, maybe over 5 years. You can strategically time Apple, usually based on when they have big announcements. They'll pop up and then they'll come down for a little bit. But everybody is thinking that people are going to be getting new phones. Apple is getting ready to announce a new project launch coming up in the end of April, and stimulus check will be rapid by the end of April. So this made everybody's top 7 list, and those are your top 7 And let me get back to my guest. Jarrell, if you can turn your mic back on, you're muted right now. I want to get you in. Okay, can you hear us now?
Yeah.
So what do you think about Barron's top 7 stimulus check stocks that they're telling people they should be taking a look at over the next week or two?
Well, you know what? The two that I was really interested in, the Overstock and the DraftKings, and reason why is one of the things you touched upon, which was the states opening up to the gambling. Like everyone, you already know like how the FOMO is, fear of missing out, and everyone that's getting able to partake in this industry. And I mean, another thing, oh man, I can't remember the name of this other company, but they're big in esports. But the whole point is this whole gamification, tokenization, the cryptocurrency, everything the direction that we're going in this digital world. Well, I mean, it was already been digital, but this contactless, world that we're going into, and giving people the ability to, jump into these different industries at will. Activision, yes, that being another a stock. Like these are going to be stocks that I can foresee for the near future. I mean, we're going to see a lot of people being able to come up on big percentages, especially with these stocks, because of where we're going. These stocks have a foothold in the future.
Absolutely. Larry, how you feel about them?
Yeah, I mean, I feel like I look at some of these stock prices and I think that they'll probably go up some, but sometimes when I look at where they've come from, like over the last 52 weeks, and you look at some of their 52-week highs and lows, I wonder if maybe we missed the boat somewhat. I mean, I'm looking at Overstock. They were down to 253 at one point, and now they're high. I mean, they're at like $71 or something like that. And I wonder how much more room for growth they have. And, I mean, some of these retail stocks I think are going to do well. You're going to have people like Target that are going to do well because as soon as people feel safe to go back into the stores, they're going to see a lot more foot traffic than they're already getting. Plus, you have people that have gotten comfortable that maybe weren't fully comfortable with online shopping because they were worried about either security or they were worried about selection. There's a lot of people that have become much more comfortable with online shopping. So I think you're going to get those people continuing to shop online, and a lot of people are getting, you're going to see a lot more foot traffic. So I think some of those will grow, but some of these I wonder how much more room they have to grow. But I guess we're going to find out.
Oh, we're going to find out. I pulled up my account, one of my accounts, and if you can scroll down to the side of my options, clearly I'm all up in Activision. I got a 105 strike, all up in it. And their next revenue report is the beginning of April. And all these companies, to Larry's point, we always preach, you buy the dip, sell high, buy low. But here's the thing. Good companies go up when you have good earnings and good reports. Each one of these companies all have outstanding reports. It sometimes just comes down to timing when they're going to announce some good information or timing when something is going to happen. And that good thing that's about to happen to all of them, ladies and gentlemen, is stimulus. And so if you're going to pick one out or two or three out of this group based on growth, because you're trying to see something that hasn't hit such a high, I'm definitely with DraftKings. I'm definitely with Activision because everybody's in the gaming right now. You guys saw exactly what happened this week with Larry's new favorite stock, which was...
You talking about the Korean one?
No, not the Korean one. The gaming stock that we've been Roblox.
Oh, Roblox, right? Yes.
It came out, ladies and gentlemen. They set a $45 price. It opened at 60 and then went all the way up to 80 at one point, and it's been holding steady at 75. These stocks aren't going anywhere. These are now stocks and later on stocks.
Yes.
But to just probe our guest a little more, Jarrell, tell our guests how long you've been investing and what are your favorite methods for investing. And then we've got a few more questions we want to ask you as we go ahead and try to dive into your investing brain.
So, when I got started trading, man, I got started way back like 2011. And just trying to understand. I mean, we all as traders, we go through this cycle where you know something and then you think you got it and then you find out you don't. And then you go through some the more of the learning process, find out, okay, I learned some more, and then you find out you don't. So it was a consistent growth of learning. And then by the time, like, I want to say maybe like 2014, 2015, that's when everything started clicking for me. And so a lot of times, as far as like when a lot of people ask me, like, okay, if you're going to start investing, like, where should I start? Where would I go to? And the one thing I usually tell, especially new people, because we're having an influx of melanated people being interested in the stock market, and which is
right.
a beautiful thing. It's a beautiful thing. So the one thing, if anyone was to hear this, I would say the first thing I would tell them to do is start looking into the indices. Start moving into the S&P. Start checking those things out, because if they can get a foothold with understanding, the basic supply and demand law of economics, and understanding, where they have to buy and where they have to sell. I think them doing that and going that route, as opposed to like a lot of these groups, doing Forex and stuff like that. I think if they can get themselves a good foothold, and that's into at least futures. Because I mean, listen, we
I just want to tell people, if you are not a serious hardcore financial person who's paying attention to global markets, do not mess around with currencies. Just don't do it. It's not that you can't make money. You just, if you're not serious about it and you don't understand, international markets, you just won't.
Right.
Or you'll waste a lot of money learning, and then you'll be upset
the long way.
Right.
It's like, and I tell people, it's like, it's Forex is like heroin. Like, if we had to compare it, because it's just everyone sees that hype and quick fix about it, and it's like, just trying to get people to move into an arena where it's at least logistically capable of them to make money every day.
Right. Now, I agree. Totally agree. What I usually tell newbies, in the beginning, when you first start, like when you feel all this emotion, you see people making money and you want to dive in, they always want to know where to go. I always tell people, make 75% of your portfolio ETFs or indexes, just like Jarrell said. I'm a fan of either one. Buy the SPY, buy ARK ETF, buy ETFs that manage their individual stocks for you, and then you take that other 25% and you bank on growth stocks. And as you learn how things move, then you start venturing out into more value stocks that have a potential to grow a lot more, but your foundation is diversified and it grows with someone else basically managing those stocks for you.
Okay.
Hey man, get out of my head, please.
the fun, when you come from owning a business and you've had to deal with the income streams, the revenues, the expenses, the debt, you understand that this is something every company has. And when you first get into this thing, you don't need to be worried about reading who's got a lot of debt, who's spending how much money to grow, who's cap X, large cap. You've got a lot of learning you need to do. So if you want to get in the game, make it safe in the beginning. Put your money in either indexes or ETFs, and in some cases, mutual funds, and get one or two individual stocks and just grow with that as you learn. So that's has always been my advice for newbies. And then as you follow people like me, you follow Jarrell, which you can find him on Facebook. His links will be in video description. He's also in a huge investing group. Link will be in description. And he has been willing to help people damn near for free. Just giving them great advice here and there. And I'll tell you what, boy, time ain't free.
But you know what? Going as you say that, it's like because there's so much information that's out there that can turn people in the wrong direction, putting it out there so people can understand, hey, listen, there is a process to it. There is like, and I don't want to say like a hierarchy, but you still like with anything, you got to pay your dues. You gotta go through those moments where you are learning how to read financial reports, read just matter of fact, even just going to understanding who you are as a trader.
Right.
I think that's one of the first things that as a trader, if you really want to get into this, and I say, before anyone gets into trading, know who you are as a person. Understanding who you are as a person, and then being able to look and see what types of trading there are, because there's there's the fundamental, there's quantitative, and then there's the technical, right? And having a person go and say, hey, listen, what are you? What appeals more to you as a person? Are you a numbers person? Are you a person who just like to know all the facts? You just want to know everything. Are you one of those sentiment people? So getting them on that token, on that tip first, and then letting them decide as to how to go about their trading business, and then following someone like you, Larry, or myself, or anyone else. I think that's the first steps. Like if I was to ever give anyone an idea or any type of direction, and I think being able to put that out there with the garbage stuff that's already out there, so you can leave those cookie crumbs for people, because it's hard. I mean, everyone is a guru nowadays.
I'll tell you, there's one thing. There's one thing that I heard from a guest on CNBC that really helped me, and it's simple. It's just a simple concept. Lamont and I talked about it a number of times. I'm sure other people have heard it. It's not some secret, but the person simply said, before you buy anything, make sure that you understand personally if this is an investment or if it's a trade. Yeah. And they said, don't let a trade turn into an investment.
Yes.
So when you buy something and you plan on flipping this thing in the next couple of days or weeks, then keep that as a trade in mind, because you may have to take an L on it. Don't let it sit there and turn into an investment. You buy $100 stock and you just keep holding it, thinking it's going to go up, and now you've all of a sudden watched it just steadily drop down to like $12, $13, and you got a ton of money. Just if it's a trade and you say I'm giving it 3 weeks and it drops, take your L and move on.
Yep. Larry just hit me right in the head, because I was going to say, with every stock you buy, you need to understand, what is your timeline exit strategy? Is this long-term, short-term, intermediate, swing, or day trade? You've got to know from the jump. And then you've got to try your best to stay disciplined with your fundamentals to know, okay, this is when I need to get out. This is how long I need to stay. Basically what Larry's saying, you need to know what is the timeline for everything you guys buy. Thinking about it. Because I've done some one-on-ones with people who I'm always asking them, what is the fundamental of your portfolio? When a lot of people get with me one-on-one, they just want to talk about buying calls to generate income. And look, I don't knock you for wanting to do that, but I still want you to have a fundamental that's growing for you as you're doing the call buy strategy. Now, Larry knows how I've grown my portfolio, and I always try to steer my people to consider doing this route. I grew a large portfolio by selling puts, being the money for the stock market, by having enough cash that I can go and say, you know what, I believe Amazon is only going to take maybe a 10% hit this week or keep going up, so I'm going to sell a put on that stock. I always encourage people to take that stance first before you start buying calls, just so you can know how to get your mind right for the stock market moving in two different directions. And that's what's worked for us. Jarrell, what type of strategy do you use for your investing for the short term?
Well, for short term, I mean, and since we were still talking about just buying calls, selling puts, and the SPY. What I like to do is I like to use, especially in the short term, indices that's my go-to. You being on the E-mini, so I like to come in with, let's say on a Sunday, right? if I'm setting out my playbook for the whole week, me just doing the forecasting, I like to go into just looking at the SPY and the VIX, looking at those and using those as a means to execute and build up my capital, somewhat similar to what you were talking about earlier, which is using 25 to 30% of your gains off of the S&P or the indices, or if you're trading gold, crude oil, if you're into that type of thing in the futures market, just using that as a means to create that growth for you. So then from there, I'll go into my day, like maybe like on Wednesdays, Thursdays, I'll go into my process of narrowing down my stocks. I've already, had listed, just going through the floats and checking, and narrowing down my top, from my top 10 down to my top 5. Then, I got those 2 or 3 that I feel strongly about after, I've watched the S&P, after I watched, the ETFs and things like that. Once I have a foothold on that, then that's where I take, I'll take an opportunity on, said stocks I'm picking.
Right.
Lamont, I've been watching the comment section. I know there was a woman named Giovanna D that asked, how do you get started? Like, what company do you purchase from? And I think she's asking about how do you actually physically get started with buying stocks, and maybe what brokerages do you use? And so maybe you guys can talk about that a bit. Both of us have Robinhood accounts. I started my Robinhood account just recently, just strictly for the purpose of doing options. I do most of my trading with TD Ameritrade. I have also another account with Charles Schwab that I do strictly penny stocks with. That's all I do in there. And I buy cheap stocks. I just let them sit there. I don't really trade them. I buy them and just see if they go up or go down. And so far, I'm up about, I don't know, 150% on that account. So I'm feeling good about that one. My Ameritrade one's up a lot. My Robinhood account is down because I got screwed with the whole Wall Street bets thing when they stopped the trading. So, but that should recover. Yeah. But there's a lot of different options out there for brokerages if you're looking to get started, so that you can actually start buying stocks and ETFs and all that. So, you can, there's Schwab, there's E-Trade, there's Robinhood and TD and Fidelity. There's lots of different ones.
Then you got the boutique ones. You have the Ninja Traders. You have Trade Station, eSignal. Then you have other ones like Investor RT, which is a platform. What's another one? It's another one I'm forgetting. But there are just so many Sierra Charts, Tradeovate, which I heard is a really great one for people who are trying to get into futures and things like that. I'm a really, really big advocate for people learning how to trade futures, because me going through that process, I know what it did for me. I know the books that I had to read. Like, one of the good books that I recommend for people. But it's definitely for like the everyday person, which is the Jack Swagger book, the Complete Guide to the Futures Market.
Okay.
I really feel like if people read that book, because of how it's written, I think people will have a greater understanding, especially if they're trying to learn and understand. Okay, well, if I'm gonna get into this type of platform, well, at least I need to know what these things mean. And I feel like they put it in an order where if they read it and if they're looking and they're building their platform, or they're picking whatever platform they want, like I said, if they're going with like a TD Ameritrade, or what's another one, like the Fidelity, like there's certain platforms that I found that if you're reading along with that particular book, it helps the learning process. For some reason, from what I've started, from my findings, from me giving that to other people, yes, that book is key. And if I'm gonna give out some of the keys that was in it, the chapters that stuck out to me was chapter 9, chapter 15, chapter 22. And chapter 37. Those were the 4 major chapters that I feel if anyone's watching this, if they go in and look at that, and then go into I think chapter 15, it states that one of the most reliable signals is a failed signal. And then allowing people to go from there and then start under their understanding, their growth. I think once that clicks for people by reading those couple of chapters, they'll have a better understanding of what they need to see, and then to be able to choose their platform better based on who they are.
Mm-hmm. I would also encourage people to have 2 platforms, maybe one that you use as your main go-to and then one as a backup
Right.
in the event something happens to another one. So like Larry said, I'm big in Robinhood and I have TD Ameritrade. The main reason I have them is because they have software called Thinkorswim. And as you start learning different things, the RSIs, your MACDs, and all these technical terms on how to read the movement of a stock, Thinkorswim has probably one of the most impressive free graphs that you guys can use, and they give you lots of good information. I like Robinhood for people just getting started, and I like Robinhood for people who like doing options in the beginning because it's very user-friendly, it's very easy to decipher, but as you get used to that and you want to start really digging in, you probably at some point in time are going to want a little bit more intense software to help you be able to fine-tune different things. So I'm fine with people using Robinhood as a gateway, but also get yourself a good backup when you start learning your RSI numbers, your indicators, your 30 through 70s, your MACDs, volume, and all those things that let you know when to get in and out of a trade. You would definitely might want something a little bit more profound.
I'm going to agree with you in part. I think that Robinhood is a great entryway into it because the platform is very simple. It's laid out very, very easily in a very easy way to understand. But I think you should use Robinhood as like your gateway. And then as you grow and learn more and continue to want to invest, that you should probably use Robinhood maybe as your backup and move over to a different platform as your primary, because there are some limitations with Robinhood that maybe they'll overcome later. I don't know, but there's some things you can't do on there. Like you can't, like I haven't seen it where you can trade in after hours or pre-market. There's certain equities, like you can't buy or sell international equities through Robinhood. So there's been a number of times when I've been looking at a particular stock and shared it with Lamont, and he was like, not available on Robinhood because it's maybe from Germany or someplace or from Japan, and they don't offer it through Robinhood. So there are limitations. So I would say Robinhood is great, like Lamont said, to start things off. But then as you get more knowledge and more involved, you probably want to move to a more robust platform.
Exactly. Well said, brother. Well said. So Jarrell, I'm going to give you the last word as we get ready to get out of here. I do have one graph I want you guys to take a look at. I spoke about it when we first started, then we'll get you guys out of here. And that is what stocks had the highest amount of short interest last week. Just another, cornerstone for you guys making your game plans for the week. So let's take a look at this list. All right. And you guys are familiar with some of these names. Last week, by volume and percentage of shorts, Viacom, which I love and have made a lot of money off of, was shorted last week. AON was shorted. Analog Devices was shorted. Charter Communications, which is a very expensive stock, was shorted to the tune of 6.4%. Everybody knows that everybody and their mama who know anything about stocks and business is shorting GameStop. That's next. You can see they were shorted to the tune of 26%. Snap was shorted at 6.4%. And then Discovery, the network, was shorted 29%, capping the list. Jarrell, when you see this type of information, how would you advise a client, a friend, or someone you're teaching stocks who's now at the next level where they're buying puts, they're buying calls? How would you advise them to use this information?
The way I would tell them, listen, going into it, I would tell them based on where they're at, based on their understanding, based on their knowledge. And if they're looking to get into any one of these, to you know how they say buy the dip,
Right.
you know, I think, you know, just looking and finding where, you know, where the liquidity, where the most liquidity is going to be at, find that, and then that's how you pick your stock.
Okay, Larry, what do you think about this short list?
It doesn't look like, I mean, it doesn't really look like any of them are prime candidates for a short squeeze like GameStop had. I mean,
so
basically,
basically,
high, but they don't look like they're high enough for that.
I mean, Jarrell just hit the nail on the head. When you see shorts and you see quality, Viacom CBS is a quality company. I've made about $2,000 with them in the last 8 weeks. They are viable. When you see somebody on a short squeeze like this, you wait to see over maybe 3 or 4 days, how low would that stock go before it hits resistance?
Right.
How low will it go before it hits resistance? Another one up here, Snap, is a growing, budding, like up and coming social media company. Their numbers are steadily, revenue growth has been going up. I would look at that one as well. Charter and GameStop would be the two that if I had to put money on, those would be the two that I would do it. But the issue with GameStop is you don't know how long that short put ride is going to last. And you have to watch this thing every single day for the amount of volume that's going in and out of it. If you're starting to get really, really technical, you want to take those kind of riskier bets. But for those of you that are watching what Wall Street and institutional investors are shorting because you want to make a play on it, this is your list right here. Jarrell, you get the last word as we get ready to prepare to get out of here and jump on our Homeboys channel. What would you like the people to know about you, and what would be your last word of advice to them?
Don't quit. If you just starting to getting into the just trading period, don't quit, because at some point it will all click. It will all come through. Like anything that you want to become as far as this trend. I don't mean to get all like metaphorical or just motivational, but I know that I see a lot of people come into this. We know what the numbers are. We know that the failure rate, but those who stick past that rate, who get past that point, they will see the light at the end of the tunnel. So I would say stick with it. And
Jarrell, I don't mean to interrupt you. I just want to say, I think what you said as far as not getting off philosophical, I think it's okay to get philosophical because people need to have a trading philosophy. So I think it's okay for you to tell people to get philosophical. Do it.
Well, you know, because I'm like a trading purist, man. I'm with, you know, every day making sure you take your notes down, you know, keeping a ledger, you know, keeping up with everything that you need to become a better trader, because this game is based on having consistency, consistent growth. That if you can have consistent growth and you can constantly see yourself moving up the chain, and then of course getting your, you know, going from like a Robin Hood and getting you a more robust system to do the things that you need to do so you can manage your trades more effectively. But do it and treat it like it's a business, not like it's a hobby, because you're really doing, this is real money. People are making real business deals happen every day. And if you treat it like a hobby, when they treating it like a profession, you're going to get your money taken away from you. So yeah, listen, I would definitely, you know, just go all in and learn as much as you can and be on for this amazing ride, man, because the future is here. It's here now. Like, you know, all the things that we wanted to see back in the day, like virtual reality and all those amazing things that we thought was going to be dope back in the day. Now we're here. Yeah. That Back to the Future age is here. And I mean, I just want I can't wait for the flying cars to come.
Hey, you know, they launched the flying taxi in Istanbul or Dubai, one of them. Yeah. They started testing the flying taxi. It's not a tradable company or anything like that yet, but in Dubai, they started testing the flying robo car, and so far those people have liked it. I don't know how Americans will respond to it, but when it comes to certain technologies in that manner, America tends to be last because we like things big. We like gaudy stuff. You know, we want our stuff to be huge and gaudy. And these robo cars are basically a two-seater. Two-seater drones is what they are. But Dubai is loving them. Dubai is loving them. So, fellas, I really appreciate you guys coming through. Like I said, people, I will leave links in the video description for you to catch Jarrell, Facebook, and the group he's in. You already know how to find me and Larry. We're here Monday, Wednesday, Thursday, Friday, Sunday. We do entertainment. We do the stocks on Sundays to help you guys understand how to make those gains in your portfolios. And during the week, we entertain you guys with TV and movie show reviews. And we're getting ready to jump on our brother Brandon Avery's Just My Opinion Reviews channel right now if you guys want to keep the conversation going. So until the next Sexy as Hell video, which will be tomorrow at 9 p.m., we'll see you.
Peace, folks.
Peace, fellas.
Peace.